What's going on, my financial friends? It's your friend Jack here, and today is Monday, which means it's stock buying day. It's time to buy some stocks, and we do this every single week. If you want to see last week's episode and you want to follow my portfolio journey, stay tuned for this video, and also check out the other videos linked in the playlist down below. But now let's get right into this video. So today is Monday, and every Monday, as I mentioned earlier, I do buy a stock for my Wealthsimple Trade TFSA portfolio. This is a Canadian tax-free investment portfolio. If you don't know what that is, it's very similar to a Roth IRA, only the contribution limits from each year in a tax-free savings account actually carry over to the next year, which is really, really awesome. So currently, right now, I have not filled up my tax-free savings account. My tax-free savings account, or really it should be called a tax-free investment account, on Wealthsimple Trade is sitting at about $700, and every single week I'm adding in anywhere from $100 to $200 worth of stocks into this portfolio, just because I'm not even at my max right now. My max is around $23,000, and I'm currently only at $700 because I haven't invested in previous years. Since I turned 18, it has accumulated $6,000 each year until now. So with all that being said, I'm 21 now, and I'm not getting any younger, and we got to start investing in this portfolio. So real quick, before we jump into the stock buys in my portfolio, I'm just going to explain a little bit more about my investing strategy. If you do want to skip ahead in the video to the stocks I buy, they will be timestamped, linked down in the description or the chapters on the screen at the bottom of the video bar. So once again, one more thing to explain. Every single week I have been buying stocks, and as I've been buying stocks, I've been making weekly videos on this and other videos on the channel about finances, investing, all that types of stuff. So if you want to check that out, definitely subscribe. But my investing strategy really revolves around dividend investing and reinvesting to really get that compound growth once I get up there in the higher numbers of value of my portfolio. And really the ultimate goal of this tax-free savings account portfolio is just to reach $1 million around there worth of assets in this portfolio to basically live off of when I'm older. Right now I do have some investments in things like crypto and a lot of other things like that that are more volatile, but also more risk and to reward, like higher risk, higher reward, right? Here's the thing. I also need a safe bet, and a safe bet is stocks. Stocks have been reliable for the past, 40, 50, whatever, however many years, a lot of years. Stocks have been quite reliable for the past few years, and I want to get in on that, right? I am young, and I do have a lot of time on my side as well, so I do have the time to put money in now and see that money grow exponentially over time, just because I have until I'm, 70 or 80 for it to grow. Ideally, I want it to grow before I'm too old to use that money, but you get what I'm saying here. I'm trying to build up an income through dividend investing by basically getting dividends paid to me and reinvesting them. I could also put my money in index funds and things like that, but the idea of my portfolio is that once I stop investing, I want to be getting paid every year and not have to, cut off part of my investments, sell them off. I want to just be paid off of them. I want them to grow a little bit. Maybe not even grow, just stay stagnant, but also pay me. I don't want to have to sell positions. I want them to pay me in dividends. That is my ideal situation, and that's why I like dividend investing, because I can choose whether I want to reinvest the dividends or if I want them to pay me for that month or that other 3 months, that quarter, or their annual payments, whatever it may be for that specific company. If you don't know what dividends are or how dividends work, basically, you buy stock in a company, and instead of really just reinvesting that money in their company, they pay part of their basically income made to their investors in the form of dividend payments. This just ensures that the dividend investors are compensated for investing in their company and that they will stay invested in their company. It's a good model of business, and paying the investors back some of their basically share price rather than having their share price go up dramatically is something that I really enjoy. So I've done many videos now on dividend stocks and things that are really good here in Canada, but I also have a video that I would highly recommend you check out. It's called The Fastest Way or The Fastest Method to Live Off Dividends, and that video is a really good video. I put a decent amount of time into it, and I thought it came out really well. I assure you, you probably will not be bored watching that video, and I if I could recommend one video to watch on my channel, it would be that one. That would be the first video linked in the top of the description. Will be the fastest way to live off dividends. And I also have another video covering a bunch of high yield dividends that are available in not only Canada, but US and Europe based markets. If you want to check those out, definitely go do that as well. And now we can get right into the video. We're going to be looking at the stocks I'm going to buy this week, and we're going to be looking at my previous stocks that I've already bought this week. Alright, so here we are on Wealthsimple Trade, and you're going to see my portfolio. A little bit of a staircase there because I have been investing every single week, and you could dollar cost average into the same stock over and over again, meaning you buy regardless of the price. What I am doing in this portfolio first, before I do that, is also recording the video so you guys can see what stocks are in my portfolio and why I have them. So if you want to check out the other episodes, it's a good indicator of why I have them. But the reason I'm doing it like this is because I need to build up an initial portfolio to dollar cost average into, basically built up with stocks that I like and I'm confident in, have a lot of conviction and belief in, that are going to do well. And as well, I'm putting value in this portfolio across multiple different stocks, not just one. It's more diversified. You could, if you're a beginner investor or you don't want to deal with buying new stocks and figuring out your own portfolio, buy an index ETF or something like that, S&P 500. Lots of good options for good growth, but for me, I want high dividend yields. And there are a few ways to do that, but the first companies I started off with were things like AQN, Bank of Nova Scotia, Canadian Utilities. I don't have much shares in many of these companies. The most shares I have in, I believe, is AQN and Pembina Pipeline. So AQN, I am down about $12, but that just means it's on sale. Might have to pick up a few more of those today. I'm really thinking about it. But lately I have been looking a lot more at where we see here, the covered call options. Okay, so the covered calls ETFs are basically they're run by BMO, the ones that I'm looking at, and they are very, very high dividend yield. So this one right here is running at about 7.34% dividend yield. Last month I bought $108 worth, so 6 shares at an average price of $17.75. Right now they're running for $18.10, so not bad. I'm up, as it says here, $2.10 on this investment. But what I'm going to show you now is that I have a lot of other covered calls on my watch list. This one is a high dividend covered call, one of their higher dividends, probably the highest dividend one they have here. These are not meant to grow. These stocks are not really meant to grow. Okay, the last 3 months they're up 8%, but that's only because of their big downfall back in March. They are still climbing back up there right when the market hit. So this covered call basically it doesn't mirror anything, this one, but it doesn't want the stocks that has in its portfolios to do really good. If they go up huge, this is going to call them, meaning it's not really going to do as well. It's better when the stocks stay like this because it's calling options on these stocks. It's buying and selling them to other people, and they pay you the dividends of the profits that they make. That's pretty much how it works. Grand scheme of things, there's definitely a lot of things I'm missing there, but that's the grand scheme of things and how it works. So saying that though, they do pay a healthy dividend, right? This is a more riskier stock, I would say, not because it's terrible, bad company, just because there's not as many years behind it. I believe their initial release of this has been only about 5 years. Maybe I'm wrong. I believe 2017 around there was when they came out with these covered call ETFs, but BMO has a lot of them. And we're going to check down here some really high dividend options. All the ZWs, ZWB, C, E, G, K, and U, all really good options. But they even have a utilities one right here, which I believe is this one. I do have quite a bit of money in utilities already, but this is a 7.51% yield, trading at $12.86. We're going to see here they have a US Banks one, so I'm traded on the Toronto Stock Exchange, but it's US Banks at 6.9%. And we're going to see here high dividend covered call ETF. This is a global one. Okay, so this is not just Canada, this is not just the US, that is a global one. And we're going to go here, hedge to Canadian ETF, right? High dividend yield of 7%. Now we're going to go, I believe we're on GBGG. High dividend covered call ETF, BMO Global. That's the one I have bought, I believe. Oh, it's not. That's a global one. Okay. So ZWC, which is high covered call ETF, that is the one I do have. And ZWB, which I believe I have not looked at yet, is a 5% yield. This is for Canadian banks, okay? So like TD, CIBC, Bank of Nova Scotia, Scotiabank, that kind of things. And those are ETFs, meaning they're not only diversified, but they're also a really high dividend yield. Not because they're banks, but because they're covered calls on the banks, and they pay their shareholders the profits from the covered calls. So it's a lot different. It's a little bit different than investing in a company. It's really investing in someone's profitability, which is not a bad thing either. But these are by BMO, so something good to mention. A pretty big company in the stock market and well known. And I think today we're gonna go with something along the lines of the utilities, I believe. I do have a lot of utilities in my portfolio, but that's because utilities aren't going anywhere. In my opinion, they're a pretty safe bet. They are a little bit more boring, but with a 7.49% yield, I don't think that's bad at all. And I really do like this price of $12.86. I believe we can buy, let's see how much shares we can buy here. We have about $128, $123 am I ready to buy. But I think this is going to be our buy today. So we're going to go market buy. Usually we don't do market buys, or not always I do a market buy. Sometimes I do a limit buy where you put in the price you desire. You don't want it to stray from that price because the price you're seeing here, $12.86, is 15 minutes behind. You could get a little bit of cents difference in the trade, but with stocks like this, they're not very volatile. You don't have to worry too much, but if you do want a set price, you can go ahead and click the limit buy option there and set your price. But what I'm going to do, just put in how many shares we can get. I believe 9 shares is what we can get, because 10 would be a bit too much. Yep, 10 would be a bit too much. We're going to get 9 shares of this company, which leaves us at $115 for the estimated cost. Going to have about $8 left in our account, but that's okay. We'll use it next week. 9 shares of ZWU. Press continue. We're buying at market price, so it should go through pretty much right away. The order is sent. You're going to see here in a second the order will be filled when we update here. Yes, the portfolio number did glitch there for a sec. But you're going to see now, I believe, when we scroll down here, ZWU, and yeah, there we go. That's our stock buy for today. We're already down 5 cents, so we're killing it already. But I believe all these covered calls from BMO are monthly payers, which is another thing to look into. If you really like monthly payments, really good stuff. Obviously, you can just reinvest those dividends. That's what I'm going to be doing. And I'll be updating you guys on my dividend portfolio every single week, if not more, especially when they pay me. If I get dividend payments, I'm going to make a video about it just because I think it's fun, and I think the stock market is, it's something to have fun around. It's not all have to be fun and games. It doesn't all have to be super serious. I think the stock market can be a little bit of a game, right? It can be fun and games. So thank you guys so much for watching this video. It's not over yet, but that's the stock buy for this week. And real quick, I'm going to go update my spreadsheet. I'm going to show you guys my spreadsheet. And if you guys want access to that spreadsheet, there's a video link down in the description showing how you can plug all in your numbers to that spreadsheet and have your own spreadsheet. You can access it on your phone through Google Docs and on your computer. So really helpful just to see an overview of your portfolio if you want to do that. And I'm going to show you guys right now what it looks like and how you can do it yourself. Alright, and here we are on my dividend spreadsheet. Very simple. I just plugged in the numbers here. All I had to put in was the number of shares, right in the ticker symbol here, and then these fields are calculated. If you want to see exactly how I do this step by step, go check the video down in the description on my spreadsheet, okay? That is a free video, free spreadsheet. You can do exactly what I'm doing right here. Plug in your own numbers and plug in your own portfolio. You just have to look at your investment app or whatever brokerage you're using. I'm assuming you're probably using Wealthsimple Trade, but you can go over there. They're going to tell you your average cost and the number of shares you have for each ticker symbol. Then you just plug in the data, and you can drag down cells like this, and they're going to fill in with this ticker symbol on the left here. Pretty simple. So this is my portfolio right here. Pretty simple. Once again, pretty simple. But yeah, very simple. How many times am I going to say simple? I don't know. But very easy to do. And you're gonna see here the dividend frequency. That is something you have to plug in yourself, and then the dividend yearly dividend per share. That is something you have to plug in yourself. If you want to find that, both those things, all you have to do is come over to this tab right here that I've opened, and then click on basically your ticker symbol. You search it here in the top right, and you're going to see I put in ZWU, and you're going to see it's also came in here, monthly dividend frequency, and 8 cents a month. So you times that by 12, and you're going to get your yearly cost, which is 96 cents, I believe, per year, which is a 7.47% yield at the current price right now. So something to note with dividend payments is they are really not something that is percentage based necessarily. They are a set amount every single month or 3 months, however often they pay their dividends, and the percent does fluctuate because the share price fluctuates. So that's how that works. If you're wondering, if you didn't already know that. But yeah, go to dividendhistory.org if you want to find out this kind of info. Search up your ticker symbol and you're going to be able to find it, and then calculate your yearly dividends. If it's a monthly one, it's times 12. If it's a quarterly one, it's times 4. So just like that, you have your monthly dividends. Now, real quick, I actually said this was 5 years old. It might be a bit risky. Actually, this is 11 years old, okay? Not 11 years old. Actually, almost 11 years old. So 10 years old, just about almost 10 years. And yeah, almost a decade. The inception date was 2011, not 2017. Bit off on that, just 6 years shy of being right. But yeah, just something to mention right there. 2011 was their inception date for BMO cover call Utilities ETF. Anyways, thank you guys so much for watching this video. It's been your friend Jack. Check out the spreadsheet link down below. Check out the other videos of my investing journey on my Wealthsimple Trade TFSA account. If you want to follow me on next week's episode, definitely subscribe and hit the bell. I will be posting videos throughout the week as well. But thank you guys so much for watching. With all that being said, have a great freaking day. Peace out. Stay blessed.